Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition on Business Today TV. We are going to be discussing NIIT Limited in this special earnings conversation. We'll be joined by the top management. But first up, a quick highlight as to how the numbers have shaped up for Q2. We've seen a profit jump of 53% on a sequential basis and 11% jump on a YOY basis for the company. It's coming at 11.8 crores. Revenues at 90.7 crores are up again 10% sequentially, 11% year on year. EBITDA has come in at about 2.1 crores. We've also seen a jump in BFSI and other programs on 17% sequential basis and 19% growth in the year-on-year basis. And the tech programs are up 7% year-on-year and 6% Q-on-Q jump can be actually seen on this one. Let's welcome our top guest on the show to detail for us the fine print of the Q2 earnings. Mr. Rajendra S, Pawar, the chairman and the co-founder of NIIT Group, is now joining in. Warm welcome to you, sir, and thank you so much for taking the time out for this conversation. First up, great set of numbers coming in for you. Tell us what have been the key contributing factors for this quarter. Has it lived up to your expectations, and can we expect the journey to be even better from here on for the second half?
Thank you, Sakshi. Thank you so much. I always look forward to this in-depth discussion where we get the opportunity to talk of strategy behind just the highlights, which during results time everybody is looking for. So it's been a good quarter, another double-digit growth, 10% as we had said, QOQ, and we expect that to continue for the balance of this year to start with. And so therefore we are looking at the growth that we had talked about, maybe upward of 24% for the year, 380 to 400 range, and of margin in the 3 to 5%. So that's the highlight, and we are on track. So now to understand a little bit, you did allude to the slightly faster growth in the BFSI compared to the growth in IT. And IT, I think, is still kind of getting out of its trouble of overhiring in 22. So, and again, you people are reporting this. So hiring is coming back. There's usually a bit of a lag, but hiring is coming back in IT. And in any case, what we had done, even when the hiring was down, to still straws getting growth was because we started focusing on the tier 2 GSIs, which, as you know, have shown good growth in the last few quarters. And we also started going a little deeper into the GCC space.
Yeah.
Those gave us a bit of a hedge to the slowing on the larger companies in terms of hiring. But now I think it'll even out, so we expect that to improve going forward. So that's so far as the IT sector is concerned. Banking and financial services, and of course we are bulk in banking with a lot of growth in other sectors to happen. That has been growing faster, and that is, I think, indicated in the figures that you gave of growth of 19% YOY and 17 QOQ. And that is because the sector is growing, the hiring in the sector is growing, and now we are dealing with every leading bank. So that's a strong position we are in. And I think the BFSI sector is getting much wider. All parts of B and F and S, all are growing fast, and therefore we see much greater depth in that going forward, with no real bump coming up in the way, like we had for IT for some time. So that is in so far as the macro picture for our sectors.
Right. So, Mr. Pawar, let's talk forward-looking now. As far as the tech sector is concerned, you did say that some recovery is underway, but we also know that Q3 is again a seasonally weak quarter for the entire sector. There are more furloughs, less number of working days right there. Do you think this will further elongate the recovery process? Will it now start to come in properly from Q4 or maybe shift to even the next financial year? Especially now we are looking at the US elections come in as well. So how do you think these macros will also shape up, the interest rate cuts also happening there? What are the key factors that are likely to affect the tech sector, the hiring process there going forward?
So, see, our linkage is much more to the hiring than to just revenue and profit of the sector, though that matters. I think the IT sector outlook, they are obviously far more confident of going forward in spite of challenges, because some of the challenges have been around for the last couple of quarters. So, but the fact that they are beginning to hire tells us that the overhiring done in 22 has kind of played itself out, and therefore more people have to be added. And that's the key metric which we are looking at. We don't see the IT sector cutting down people in fourth quarter. That doesn't happen. Revenues may have some slippages because of scheduled dates, less number of working days. But the so far as the headcount is going up, that is a good indication for us going forward.
Okay.
So we don't see, of course, there's anything can happen in this world. There's far too much of tension all around.
Yeah. Yeah.
It's very too much of volatility, too many risks. But I think the world is kind of somehow managing, and at least on the India side, we are, I wouldn't say insulated, we are insulated from those kind of calamities internally. The economy is doing well. And so we don't expect those factors, unless something really spins out of hand, to affect the world, and therefore to affect the hiring. We remain quite confident on that front.
Right. When we talk about the BFSI and your other programs, sir, could you break it up for us? How has the performance been for the enrollments in the early career as well as the working professional segment? And going forward, what is the trend that you expect for H2?
So, interestingly, small change, first of all, quarter to quarter, that the working professional last quarter was 51%, early career was 49%, and this year the early careers has come down a little bit. So what's happening is that the IT sector, the addition that they will do will happen mostly for this freshers only next year, right? So during this time, they're filling the needs. One, because of changes in technology, so some lateral movement. So the working professional community is somewhat increasing in number. It's gone from 48% early career, 49 to 48, and working is just 1%. But it's indicative of the fact that in the IT sector, some lateral intakes are happening. Similarly, in banking, also they've been hiring very rapidly on the entry side, and now we see in the other aspects of financial services, again we see some migration of skilled people across companies. So there is one minor kind of change, but they remain roughly half and half. And the technology sector, which was 66% last year, this quarter for us went to 64. Banking went up, and that's the mathematics of the different growth levels. So in BFSI, also we still see many banks whose retail operations started accelerating in the last 1 year will happen for the next 2 years. But the others who had already filled out the retail, and then in their case, the more experienced people, the client relationship managers, people with experience, those were being added. And so, as I said, in both sectors, interestingly, it's not just entry level people who are mainstay. We see a steady increase in the entry level additions, more in banking, as we said, the retail operation growing, and we see lateral moves happening in those sectors as well. So it's a good mix. I think both are growing, and we have more and more offerings for the more experienced people. In IT, we are doing more and more work, either new technologies like Gen AI, but we're also doing mid to senior level tech people training as well, because they also have to upskill, they also have to upgrade. So both things are good.
Okay. You've been adding clients regularly, quarter over quarter as well. What is the kind of pace that you have added clients this time around in Q2, sir? And what's the outlook on that front? Are newer clients getting added, especially because your focus on Gen AI has further increased?
See, the number of client additions is not just linked to a technology. So I would say this is the India growth story at work, really speaking. Look at sector after sector has growth plans, right? And there are new sectors on the horizon as well. We see the whole field of manufacturing. We see EVs as a big space, the whole decarbonization space. So those are not the big growth areas for us, though we are making our entry into those, and you'll hear more as we go forward. But Gen AI for sure is one area where we have a lot more corporate interest.
Yeah.
Small beginnings, but good leading organizations looking at how to embrace Gen AI. So when new thing comes, Gen AI is not very new, but still for the
Yeah.
corporate world, they're cautious. They're excited, but they're cautious. So there we see client additions, but even in an existing line, the sales and service excellence part of our business, we see very good brands coming in because I think across the board in the corporate world and manufacturing world, the importance of skills has never been as high as it is now. And so the idea in our days of skill being only for blue collar, right?
Yes.
That is behind us. I think in every job now we're seeing when we say critical thinking skills, that's not only for entry level. So
Yeah.
the word skill has become a wider thing. Many professions were earlier, for example, 20 years ago, who wanted to be a salesman? Right? But even then, we used to hear in the developed world that the salesmen make the most money and good car, have good
Yes.
cars and big houses. So I think as the economy is moving up steadily, as the set of offerings by companies is becoming more comprehensive, many of these professions are also getting much more acceptance. And so service excellence is a big thing. I mean, all of us demand now. We have so many offerings for any product or service. We are becoming very demanding as consumers. So service excellence also needs high level skills. So we find that across the board, corporations are looking at talent building, skill building, uh, far more seriously than they've done in the past. So that's also opening up many more conversations for us. And of course, GCCs we talked about, we're trying to go deeper into that space, a lot more headroom there. And the tier one GSIs were a mainstay till a couple of years ago. And then now we are diversifying into that also. So maybe smaller beginnings, but more and more people and more companies getting engaged.
Right. And lastly, sir, I wanted to touch base upon something that I was discussing with you before we went on air as well. And this is how investors community began to view NIIT Limited right after mid of August was completely different from how they were looking at NIIT before August 15. So what really transpired there? What was the thought process behind it? Where are you going to be steering the company going forward is what I want to understand in this answer from you. Because all we got to know at that point in time was that Mr. Ramesh Simani picked up a stake and that fired up the stock like probably nothing that we've seen in the recent times at least. So what has changed for the company internally, and where are you going to be really looking forward to taking the company now?
So first of all, we're delighted that the people of the caliber and reputation of Mr. Damani take us into their portfolio. And that's more an outcome of faith in the company, which we see as a very big plus. But you talked about something happened on 15th August, and that is the Independence Day. So that obviously makes a difference every time. But coming to the point, you have to remember that it's only last year that we demerged the two businesses. And you have to give the market some time to understand what's going on. So I think post the demerger, we've seen both companies now, and NIT MTS or
Yeah.
NIT systems, also beginning to grow well. And we've seen NIT Limited also. So I think the demerger, conceptualized much earlier, but executed, initiated also 3 years ago, but executed last year. It has taken time for the market to understand, and that's understandable. They'll see, okay, demerger has happened, now what's going to happen? So it
Yeah.
takes a few quarters. So I guess that confidence is coming through. And we, as you know, if you look at our distribution of shareholding categories, we have a
Sure.
very large percentage of institutional holders. We have a good percentage of retail, and we have a certain percentage of promoters. So, but clearly, the institutional investors are large, so we're well studied, so it's not just speculation on the market. And I think the time that the market has taken to see us, and then there are trigger events. So, time to time, the trigger events help the market to correct itself to the right level. So, So
Okay.
we hope to see maybe similar events in the future. Another Independence Day next year, and so on. So goes on like that.
Okay, wonderful, and we will continue to get you back on the channel to hear more about it as well. Mr. Pawar, it's always a pleasure to host you on Business Today Television, and here's wishing you from the entire team of BTTV a fantastic upcoming Diwali, and hope that you with your entire team at NIIT Limited and NIIT Learning Systems as well have a fantastic year ahead along with your loved ones and your families at home.
And just to remind you as well, that our new CEO joined 1st of July.
Yes.
Completed a quarter, so you'll hear him being more and more visible. He's beginning to
Wonderful.
handle on things. So we have now a new CEO in place for NIIT Limited, and that will have its own positive consequences as we go forward.
Wonderful. Thank you so much for being with us on this edition, sir. Always a pleasure.
Thank you, Sakshi. Thank you.
All right, viewers, so there you have it from NIIT Limited, the key highlights of the earnings, what has been working well for the company, what's the outlook going forward. I hope this has given you enough and more clarity about what the management really hopes to see as the company really moving forward to from here on as well. So stay tuned on to Business Today Television as we get you such marquee guests, top managements from various companies that are reporting their earnings that actually get you the management's perspective on the companies that you're holding in your portfolio too. Many thanks for being with us. Stay tuned. There's a lot more lined up for you on Business Today Television.
Speaking of AI, it's now time for my favorite segment on the show where all your tech queries are answered. I have one on Instagram from Shreya who asks saying, is there a relation